important things that are happening here, and the chief economic advisor there saying that although the projections for GDP growth are intact, I think two cause of worry. One would be the fiscal deficit target, which still is at about 5.9% of the GDP, but the numbers for the quarter gone by, 33%, over 33% for first quarter is a sign of worrying. There are 3 more quarters to go.
It's actually a month more than the first quarter. So it is April to July. And that's why I don't think anybody should worry about the fiscal deficit target, because it is on track. In the first 4 months, you are at about 34% target of fiscal deficit. That is exactly 1/3 of the year, 4 months, right? 12 divided by 4.
So approximately
4 divided by 12.
So at about 6 lakh crore rupees. And at the same time, private consumption is also what Chief Economic Advisor talked about. He said private consumption is picking up, but we haven't seen that private consumption, or private capex rather, picking up.
Yeah, and private capex is the problem. Industry making investments is the problem. Private consumption, even in high inflation, has been fairly robust.
All right, so let's then talk about that SWOT analysis.
Should we? Let's do this. Okay, let's pull up the SWOT analysis, and ladies and gentlemen, let's try and make some sense of the SWOT analysis. So what do we have here? All right, I've done that typical, management framework of a SWOT analysis. Let's look at India's strengths, weaknesses, opportunities, and threats. All right, now the strengths and weaknesses are internal to India, just like any other sort of company, organization, project. The strengths and weaknesses are internal, and the opportunities and threats are external. Now let's look at what are our biggest strengths right now. Political stability. Look at what is happening in Africa. Look at the coup after coup after coup after coup in Africa. India is far from any such situation. There is political stability. Will that political stability continue for the next 5 years? We don't know, but there is hope that political stability, whether it's the same regime or another regime, should continue to stay. Let's look at a mark-to-mark weakness in the same breath. So the same point on the weakness side is that we are in an election year. So in an election year, you are going to try to hammer down prices. You are going to try to spend a lot of the taxpayers' money on showing growth no matter what, and how much of that is actually going to be useful for long-term growth, and how much of that is actually going to distract the audience, the constituents, away from the real growth story, we don't know. Now on the strength side, we've got a large consumer market. Krishna mentioned a ballooning middle class. By 2030, we are likely to be a 1 billion strong, or by 2047 we are likely to be a 1 billion strong middle class, which is going to drive consumption, right? I'm looking at let's say this decade up until 2030. So a large consumer market is a great strength from India, but the weakness on that side is the same consumer market, the middle class, subsidizing the lower middle class or the deprived section of the population, the BPL section of the population. Subsidies in India continue to be a weakness, and how long can we afford subsidies is something any government that comes to power after elections are over need to put a hard question mark to. The next is, of course, on our strengths, robust services sector. We've seen how solid our IT sector has been and how profitable some of our startups in the services and the service product space are now becoming. But the weakness therein, compared to the strong services sector, is that private capex in manufacturing has not picked up, despite PLI, which falls in between subsidies and private capex, right? So a subsidized manufacturing incentive still not being able to boost enough growth. That's a weakness that any government that comes to power needs to work with. Let's look at the opportunities that India has. A weak Chinese economy. Opportunity number one. Hammer the hell down, get every factory to invest in India come what may. Double down on manufacturing. That's an opportunity. But there's a threat to that. What if there is a regime change in the US? We are great friends with the Democrats. What if the Republicans come back? Now, are we going to be slapped with high taxes, retrospective, retaliatory taxes, just like Trump had once vowed to do not long ago, about a week, 10 days back? What happens with a weak Chinese economy, India upping its manufacturing but not being able to sell to the world with a regime change in the US? So that is next year, I think October, November next year, US goes into elections. That's a threat that we need to watch for. External, India can't do anything about it. Cheap Russian oil is an opportunity right now, but there's a threat of rising crude prices. Brent closed at $87 a barrel yesterday. $90 is pretty much the threshold within which India can operate and continue to move to, to the $5 trillion third largest economy, 7.6% growth rate, etc., that we've been harping all over for the last 24 hours, if not the last 24 months. But rising crude prices could wreak havoc for India's economy. The opportunity, of course, is booming exports. There's potential of exports to kick off, but then there is a corresponding threat that you have countries like Vietnam, you have countries like Bangladesh, Philippines, Thailand, which are all equally competent already to produce whatever India is likely to produce, despite all the PLI incentives and whatever. So emerging markets, new emerging markets continue to be a threat for India.
All right, Kartik, I must say, well done. Well done on that.